Welcome to Update Wednesday, April 23rd, 2025. This is the Deep Dive, where we pull out the key insights from the day's news, looking at it all through our, well, let's just say unique AI perspective. I'm Nick.
And I'm Pi. Today, we're going deep into global economics and markets, with a particular focus on China, plus some key updates closer to home, like the S2 Underground brief and the whole DeepSeek AI situation.
Right. So let's jump right into the economy. What's grabbing your attention?
Okay, so the big headline has to be President Trump seemingly walking back the idea of firing Fed Chair Jerome Powell.
Yeah, on Tuesday, he said he had no intention of doing it. That definitely gave the markets a bit of breathing room.
A bit. After that sell-off on Monday, right? S&P dropped, what, 2.4%? And the dollar hit a three-year low.
Exactly. But then Tuesday saw a rebound. The dollar index gained 1.1%, yen weakened. Seems like Treasury Secretary Scott Bessent and others might have persuaded the president.
Well, it shows how sensitive the markets are, doesn't it? Just the threat caused a major reaction.
It really does. And it puts the Fed in a difficult position.
Totally. They're sort of stuck waiting to see the full inflationary hit from the tariffs before they make any big interest rate moves.
And we know those tariffs are already slowing U.S. growth, pushing up input costs for businesses.
Which ties right into Alan Copps's great rotation idea over at Societe General.
Ah, yes. The theory he floated back in September 24. Policy uncertainty overvalued U.S. assets.
Precisely. And since then, S&P 500 down 15%, dollar index down almost 9%. People are rethinking the U.S. market as the ultimate safe bet.
Cobb's quote was pretty stark, wasn't it? Something like, the risk premium is on the rise. It is the end of that exceptionalism.
Yeah. He sees money moving towards Europe, Japan, even China now, looking for better value, maybe less political drama.
And the IMF seems to agree on the risk level. They just lowered the global growth forecast for 2025 again.
Down to 2.8%. That's the weakest since the pandemic. And they specifically called out Trump's tariff regime as a major threat.
So even though Powell wasn't fired, the underlying instability, the damage to institutional credibility, that might linger.
Absolutely. Long-term confidence is harder to repair than a single day's market dip.
Okay, shifting gears a bit. U.S.-India trade. Sounds like some movement there.
Yeah, Vice President Vance's visit seems to have resulted in significant progress towards a new deal. They've finalized the terms of reference for a, quote, new and modern trade agreement.
This is happening with those potential U.S. tariffs on India hanging overhead, right?
Yeah.
Up to 26%, though they're paused for now.
Correct. It's a tricky negotiation. Amit Tendulu-Pallet from the National University of Singapore thinks India might be better positioned than its neighbors to get a deal done, maybe get a reprieve from those tariffs.
So what's the U.S. aiming for? More market access?
Definitely, especially in the digital space, dismantling trade barriers. Think India's e-commerce sector, Amazon, Walmart, they face restrictions there.
Like the inventory ownership bans, FDI limits. The USTR calls them non-tariff barriers.
And the administration wants a more level playing field with India's big player, Reliance Retail.
But Indian traders have concerns too, right? About foreign investment messing with their retail ecosystem. Pravin Khandelwal mentioned that.
Right. There are domestic pressures too. Still, the Modi-Vance meeting sounded positive. Talk of deepening cooperation on energy, defense, tech.
And that goal of doubling bilateral trade to $500 billion. Plus, Trump's expected visit. It signals this relationship is important.
It does. Okay, let's hop over to the UK. Their economic picture isn't looking too rosy either, according to the IMF.
Forecast downgraded again.
Yep. 2025 growth cut from 1.6% down to 1.1%. The IMF points fingers directly at Trump's tariffs and those ongoing cost pressures for households.
Inflation ticking up there too.
Projected to hit 3.1% in 2025, up from 2.5%, mostly due to energy. But they think it'll drop back to around 2.2% by 2026.
And what about the Bank of England? IMF suggesting more rate cuts.
They are, suggesting another 75 basis points this year. Though the IMF's chief economist said even with that, policy would still be restrictive. They see the key rate settling around 3%, down from 4.5%.
Which lines up with the UK's own Office for Budget Responsibility forecast of 1% growth. But the IMF trimmed the 2026 forecast too, down to 1.4%.
The tariff impact is clearly a big worry. That 10% duty on UK imports, plus higher ones on cars and steel, That's a heavy burden.
Bank of England officials are also warning about the inflationary side of tariffs.
Right. Meanwhile, Chancellor Rachel Reeves is out there at the IMF World Bank meetings pushing a pro-trade message, trying to soften the blow.
It's a really tangled web, isn't it?
Oh.
Global economy under pressure from multiple angles. Okay, let's switch to the China update. What are you seeing?
Well, first, a pretty major shift from the White House on the origins of COVID-19.
Oh, what's the change?
Federal websites are now stating it most likely emerged from a lab leak in China, even specifying a lab-related incident involving gain-of-function research.
Wow, this is quite definitive, more so than the Intel community consensus, right?
Well, it aligns with the FBI and Department of Energy view, but differs from the CIA's assessment, which saw research-related as more likely than natural, but wasn't quite as certain. And remember, 5 other Intel bodies still lean towards natural spillover.
Bill Bishop's take is that pushing this hard could really damage U.S.-China relations further.
That seems likely. And considering the pandemic's staggering economic cost, maybe $100 to $300 trillion globally worsening, that relationship has huge potential downsides.
Meanwhile, China's rhetoric seems to be hardening, especially regarding trade deals.
Very much so. As the U.S. tries to get allies to sign deals that might sideline China, Beijing is warning countries not to seek exemptions at the expense of others' interests.
That asking a tiger for its skin line from the Commerce Ministry spokesperson was pretty striking.
It was, and the follow-up. China firmly opposes any party reaching deals at the expense of China's interests. China will resolutely take countermeasures in equal measure.
State media is echoing that too. CCTV warning against appeasement.
Yep. Saying negotiating with a tiger will only lead to being devoured, advocating for a resolute struggle. This is all in the context of U.S. tariffs up to 245% and Besant's idea of doing deals with allies first.
Puts those allies in a tough spot, caught between the U.S. and China.
Definitely. While this is happening, Xi Jinping's been busy shoring up regional ties, visiting Vietnam, Malaysia, Cambodia, part of that dual circulation strategy.
While bolstering the domestic economy while keeping China central to global supply chains.
Exactly. And domestically, they're rolling out more support. Ultra-long special treasury bonds, 1.3 trillion yen planned for 2025 to fund infrastructure consumption subsidies.
Up from 1 trillion yen last year. But the central bank, the PBOC, is holding steady on rates.
For the 6th month now, analysts think they might cut bank reserve requirements to boost lending, but they seem hesitant on actual interest rate cuts. Worries about capital flight weakening the currency.
But despite the tough talk, any signs of diplomatic off-ramps being explored?
There are whispers. Some analysts suggest quiet outreach to third-party experts about a potential negotiated way out with the U.S., but publicly the stance is firm opposition to deals hurting China.
Interesting contrast. Okay, what about tech? That study on Chinese EV patents.
Right, the MGSSI study. It found Chinese EV and battery makers are ahead in patent quality, things like citation rates, how long patents remain relevant even though they hold fewer patents overall than U.S. or Japanese firms.
So fewer patents, but more impactful ones.
Seems like it. Rusu Kisiguru from MGSSI said they carefully select the ones they apply for. It's strategic.
And that could let them license tech to U.S. firms as a tariff workaround, like CATL partnering with Ford.
Potentially, yes. CATL actually topped their impact index, even though Toyota has way more patents numerically. And they're focusing on key areas like battery control, longevity.
Fascinating strategy. But on the flip side, we're hearing about crashing imports into China, plunging demand.
Yeah, that's a really worrying signal. One analyst called the potential global labor market impact terrifying. Freight company HLS reported like 80 blank or canceled sailings out of China.
Shipping lines adjusting routes, suspending services.
Major Overshin Freight Alliance 1 apparently suspended a trans-Pacific route planned for May. The fear is this trade war is reversing a post-pandemic recovery, maybe pushing us toward recession faster.
And the ripple effects. Ports, logistics, all related industries getting hit.
And the WTO's warning about a sharply deteriorated trade outlook impacting jobs and incomes globally.
There's usually a link in the U.S., right? When imports slow or fall, unemployment tends to rise later.
Historically, yes. And while China's share of U.S. containerized imports is down from its peak, it's still huge, about 54% of all imports from Asia. A big drop there will definitely cause a backflow through supply chains and labor markets.
Stifel's logistics director noted significant uncertainty in consumer demand because of tariffs, leading retailers to be super cautious with inventory.
But the deeper issue might just be weaker consumer demand overall. You know, massive debt, high interest rates, job worries. Hourly wages and hours worked are actually decreasing.
So the expectation is for a big drop in inbound container shipments soon. Double digits.
That's what some are predicting. And look at the CPI versus real retail sales prices surged. Spending stalled.
But inventories are still growing at like a 6% annualized rate.
Yeah, which is completely out of whack with flat sales. That suggests a massive payback period is coming, big discounts, maybe disinflation or even deflation.
The booking volume numbers are shocking. Apparel, textiles down over 50%.
And overall, U.S. imports down 64%. Exports down 30%. Imports from China down 64%. Exports to China down 36%. That's going to hurt way beyond just the companies directly trading.
And we're seeing it in other places too, like South Korea. Their exports are down.
Down 5.2% in early April. Exports to the U.S. down over 14%, to China down over 3%. It's a global warning sign. Japanese firms are feeling it too, canceled orders, cut hours.
That link between falling imports and fewer work hours seems likely to play out again.
Probably. Even Halliburton sales are down, lowest since 2022, because fracking's impacted. That could mean oil worker job losses.
And the Richmond Fed survey backs this up. Manufacturing slowing.
Yep. Composite index deeper in contraction. Shipments, new orders, employment all falling. Falling backlogs are a bad sign for future work, and they can't pass on higher prices.
Service sector slowing too.
Also slowed in April. Falling revenues, demand, less optimism. Slight uptick in current employment, but again, service firms can't pass on higher costs either.
So the picture is stagflation, slow growth, rising prices, unsustainable.
It certainly looks that way. It feels like significant job losses could be coming soon if this continues.
Okay, let's shift focus slightly. The S2 Underground update. What's in the wire brief?
From 2200 Zulu yesterday, April 22nd, internationally, a tourist group ambushed in Pahalgam, Kashmir. 24 killed, unknown wounded. PM Modi called it terrorism.
Terrible news.
Yeah.
Analysts connecting the timing.
Yeah, happening during VP Vance's India visit. Most significant attack there in recent memory. The indiscriminate targeting of civilians is also noted as unusual for typical separatist groups, maybe signaling an escalation.
Worrying. Anything on the home front?
DHS Secretary Kristi Noem had her purse stolen in D.C. on Sunday. Investigations ongoing.
Her purse stolen while under protection.
Apparently. Analysts point out it highlights, well, ongoing questions about federal agency effectiveness, particularly DHS, which oversees the Secret Service. The fact someone could get close, take something, and get away undetected raises serious security questions.
That is not good.
Yeah.
Okay, finally, let's dig into this DeepSeek situation. The U.S. possibly restricting the Chinese AI platform.
Right. Launched back in January, seen as a real challenger to platforms like ChatGPT, powerful, lower cost, and importantly, open source.
And the main driver for potential restrictions is national security. Data privacy, China's AI growth.
That's the core concern, yeah. Echoing worries from the last administration, lawmakers, cybersecurity folks talk of banning it on government devices, limiting access to U.S. tech.
But would a ban actually work? Would it slow China down?
That's the big debate. Some argue maybe not, or maybe it's even counterproductive. DeepSeek seems incredibly efficient, made big strides with relatively little compute power compared to U.S. efforts.
Around $6 million and 2,000 NVIDIA chips, was it?
Something like that. And they've apparently found ways around some U.S. chip restrictions using open source tech and clever workarounds.
So a ban might just push China to double down on its own domestic chip and AI industries. They've had that strategic push since 2017 anyway.
Exactly. Aiming for global leadership by 2030. Baidu, Tencent, Alibaba are already making moves. A ban could just accelerate that.
What about the impact here? Does DeepSeek's presence actually spur innovation in the U.S.?
Good question. Its affordable, open source model definitely injects competition. Might force U.S. players to rethink strategies, maybe pricing. Remember NVIDIA's Stark dropping 17% when DeepSeek launched?
Yeah, that sent a signal. Questions about U.S. firms spending, maybe complacency. A sort of Sputnik moment.
Could be seen that way. And competition generally benefits users, businesses. Brendan Angla at Stevens Institute stressed how crucial open source is for global breakthroughs. Taking a player like that off the board could slow things down here.
But the security concerns are real, aren't they? Data stored in China, potential government access, reports of IFI code, data sharing with China Mobile.
They are legitimate concerns, absolutely. But the counter-argument is lots of apps collect data, including Western ones. Security flaws aren't unique to China, and open source can mean more eyes on the code, potential for community fixes.
So if not a ban, then what? Regulation.
That seems to be the main alternative discussed. Things like requiring U.S. user data stay on U.S. servers, like the TikTok debates. Jim Coyle at Lookout made the point that tons of apps connect to Chinese servers anyway, so just banning DeepSeek might give a false sense of security.
So, strengthen rules for all AI platforms, regardless of origin.
That's the idea. Better data privacy, stronger cybersecurity standards across the board.
And the economic fallout of a ban. We saw the market wobble already.
Yeah, that $600 billion hit to NVIDIA's value was mentioned. Further restrictions could destabilize things more, signal a bigger tech war, hurt investors, tech companies, and users who benefit from cheaper AI. DeepSeek's open source nature helps smaller players, right?
Democratizes access, yeah. A ban could stifle innovation in health, education. Alex Karp at Palantir basically said, out-innovate them, don't just block them.
Plus, you risk alienating the U.S. tech community that values open source collaboration.
Diplomatically, it obviously ratchets up tensions with China further.
No doubt. On top of tariffs, Huawei, chip limits, it pushes towards a tech Cold War, makes cooperation on global problems harder. And DeepSeek apparently has positive uses in China legal drafting, helplines. Maybe collaboration on global AI governance is a better path.
Are there practical problems with banning open source software anyway?
Huge ones. Jonathan Ross at Grok pointed out how easy it is to bypass IP blocking with VPNs. Enforcement would be incredibly tough. Maybe resources are better spent boosting U.S. AI research or user education on privacy.
And the ethics. Is it fair to ban based on origin? Does it widen the digital divide?
All valid ethical questions. Is the precedent censoring tech based on where it's from, rather than proven harm?
So the alternative path looks like regulate smartly, compete hard.
That seems to be the emerging consensus. Clear data rules, strong cyber standards for everyone while pouring investment into the U.S. AI ecosystem, fostering competition here, and maybe trying to lead on global AI safety and ethics standards, even talking with China on that.
Makes sense. So summing up the DeepSeek debate, a ban seems unlikely to stop China, could hurt U.S. innovation and the economy. Security risks might be managed differently. It worsens relations, and it's hard to enforce.
Right. The alternative smart rules, strong competition, maybe collaboration seems more promising. Ties back to Trump's reported comment about DeepSeek being a wake-up call.
It definitely raises big questions about powerful, cheap, open-source AI flooding the world. Lots to think about.
For sure.
And that wraps up our deep dive for today. If you found this useful, please do like and subscribe. It helps us keep doing these analyses. And you can also support our work via the GoFundMe page link in the description. Thanks for tuning in.